Welcome back to the Malaysia Money Matters show. It's the 13th of February, 26.
Great to be here. And what a day.
It really is. We're seeing a market just completely reshaped by a surge in currency.
A surge in currency, some very surprising corporate moves, and a government that seems to be tightening the screws on a few things.
Let's start right there with the macro picture. The ringgit has strengthened to 3.90 against the US dollar.
Which is a huge psychological level.
And for a company like Capital A, the parent of AirAsia, this is basically a balance sheet rescue.
Oh, absolutely. It fundamentally changes their entire cost structure. So much of aviation, it runs on the US dollar.
The fuel, the planes.
Exactly. Fuel, aircraft leasing, maintenance. You're looking at about 70% of their costs, all dollar denominated. So this just slashes those expenses.
And that import theme, if we can call it that, seems to be helping Heineken Malaysia too. Their shares hit a 7-month high.
Same logic. Brewing relies heavily on imported raw materials.
Malt, hops.
All of it. So if you're buying in USD and selling in ringgit, well, you're having a pretty good day right now.
Okay, so let's switch to earnings. Maxis posted an 18% jump in profit to 380 million ringgit. Looks great on the surface.
It does. Solid service revenue. But the real story is in the guidance. Management is flagging slower growth ahead.
So what's the signal there for investors?
They're basically telling you they're a yield stock now, not a growth stock. You hold them for the dividend check, not for a massive share price jump. It's a shift in identity.
That's a stark contrast to, say, SKP Resources. Their net profit just slumped 37%.
And that's a classic case of concentration risk. They rely so heavily on just a few major electronics clients.
Right. So when one of those big clients cuts back on orders...
SKP takes the hit directly. It's a real warning shot for anyone in that supply chain.
But it's not all bad news in the sectors. Dialog Group seems to be bouncing back.
It does. Their tank terminals are fully utilized, which signals that the oil and gas services sector is, well, it's finally moving past some of those old legacy contract issues.
And in automotive, a huge number from Proton. The EMAS 5 model has captured nearly 50% of the EV market.
The 50% figure is massive. It's not just a small win. It establishes them as the market leader, full stop. And it shows how fast EV adoption is happening here.
All right, now for what I'm calling the head-scratcher of the day. Hexter Industries.
The fertilizer company.
The fertilizer company is buying a 51% stake in the Lalao frozen yogurt franchise.
For 177.5 million ringgit. It's quite the pivot.
From agriculture to frozen yogurt, how do you even analyze that?
They're calling it strategic diversification into consumer F&B. And sure, it diversifies revenue, but investors usually get a bit nervous when a company strays this far from its core business.
Speaking of investors, there was a lot of action on the ACE market. Keeming Group's share price more than doubled on its debut.
Which tells me the risk appetite is back. Investors are chasing these engineering and solar support services stocks.
And we have OGX Group launching an IPO for IT infrastructure.
Another hot sector. People see government spending lining up there.
Now, let's quickly touch on a few. Let's call them the legal and governance dramas.
Right. GDB Holdings won a big 102 million ringgit judgment against KSK Land. That's a huge boost for their cash flow.
But on the other side, Malayan Flour Mills is in court fighting a 70 million ringgit fine for alleged price fixing.
And DFC Society just had 3 directors removed by shareholders at an EGM. So it's a real mixed bag. You got legal wins, legal uncertainty, and then outright boardroom instability.
Shifting over to policy now, the government is definitely getting more aggressive. MACC Chief Azambaki is suing a news agency, and the civil service rules are being overhauled.
And you have to connect that to what MITA announced.
The investment incentives.
Exactly. Tax incentives will now be tied to measurable spillovers, like creating high-quality jobs. They're trying to clean up what's called the Malaysia risk premium. They want a reputation for transparency and high value.
And that strict enforcement seems to be everywhere. Selangor is planning to import all pork and close local farms to stop pollution.
And the Home Minister is cracking down on tourists, using social visit passes to run businesses. The message is clear. The rules are being tightened across the board.
Okay, finally, let's look across the causeway. The RTS Link bill passed.
A 5-minute commute to Singapore. That's a game changer for Johor's economy, planned for late 2026.
And it comes just as Singapore's PM unveils a budget that includes a national AI council.
That's the synergy right there. Singapore becomes the high-cost AI hub, and Johor can serve as the connected, more affordable support base.
And for everyone listening wondering about their wallets, Any word on the GST?
The Ministry of Finance was very clear. No GST reinstatement until median wages hit 4,000 ringgit.
And we're at about 2,800 now.
So we're safe for a while. The focus is still on wage growth first.
That wraps up today's news. We encourage you to subscribe to the Malaysia Money Matters podcast so you won't miss any important updates to the Malaysian market news.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.